What's up, guys? Welcome back to another episode of Rawstocks. I'm Rustic, and today we're going to be taking a look at the daily analysis of Tesla stock. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. So let's jump right into it. But before we get started, don't forget to like and subscribe, share with your friends. If this information is of value to you, I appreciate all the support. So getting the word out there is a huge help to me. Also, liking and subscribing helps the algorithms to get to more people. Also, in the description below, you can find a link to the Discord Traders Helping Traders, which is where I'm hanging out during market hours. We're doing live call outs in the premium section. There's free call outs as well. A lot of people having a lot of fun. So go ahead and check that out if you're not already a member. Also, there's a link to my socials. So if there's ever any questions about things you see on the chart, you can go ahead and find me there or find me in the Discord. I'm happy to answer questions. I'm also happy to share any of my custom indicator settings. All you got to do is ask. So diving into the chart today, we got the daily chart up, right? We have all these levels that we've been talking about in the past, right? We got fair value gaps, we got liquidity buildup, we got below fair value gaps, right? Above we have buy side liquidity. We have some point of controls as far as volume profile goes here, all the way up at 266.70. We also have another volume node point of control at 245, right? Which we have seen being held. We saw a candle open, trade down, but opened up right at that point of control on the volume node, right? We traded down into it and held above it today. So that is a node of importance right now on the volume profile for this swing high all the way to current price. And I'll go ahead and show you what that looks like. And it is ever adjusting as we have more trading days unfolding. But if you use your fixed range volume profile tool and you take this candle here, and we're going to measure the volume profile for the moves that we're in currently, it'll give us a volume profile, right? So that has slightly adjusted. We have the biggest point of control being now 246.92. We'll call it 247. Okay, so let's go ahead and adjust that. So we're sitting on that volume node, so we know that that is now the current point of control. And if you look at where price ended today, we are on, right? We closed down on that point of control. So a lot of volume in this recent price structure sitting right at that point of control. Right? The other one we put up here, but it rests actually inside of this volume node here. But we also have this fair value gap close. It's also on the node. So we put it a little bit higher just to represent this full volume profile node. Okay, so we'll go ahead and take that off. We don't need to reference it right now. But looking at what Tesla did today, we opened, right? We did head higher through part of the day. We rejected on the 50 volume weighted moving average. Okay, we traded down again back to that 244.38, which is a fair value gap close on the 4-hour time frame. And this is a bullish fair value gap here. So it opened, here's where it closed. So it would need to trade back down to where it opened in order for that to fully close, and we would have to close candles below it for that fair value gap to be off the table. Okay, we did trade up right here to this buy side liquidity that I had just marked off yesterday. So I'm going to take that out. Okay, even though it's a candle close, it still is an area of importance, but I'm going to remove it because we did trade up. Actually, no, we didn't even quite trade up to it. So I'm going to throw it back on as a liquidity target, being a candle close. There we go. All right, so again, we traded up. We rejected off the 50 moving average, right? And we traded down, and then we ultimately ended with a inside bearish candle. Candle's black on my chart. Black is bearish, green is bullish. Okay, inside bearish candle. A little bit of a candle of indecision. We have fairly equal wicks, right? So it doesn't tell us a whole lot on that time frame as far as where price is going, because we had Monday open with a very small spinning top doji, or that was Friday. On Monday, we had a very bullish candle that took the body of this candle, so bullish engulfing. Now we have an inside day bearish candle. Right, so what does that mean? We'll have to see as price develops tomorrow. If we're looking at our PO3 model as far as consolidation, manipulation, distribution, right, there's a potential that we had consolidation actually happen on Friday, right? And could this move up have been the manipulation, and then we're starting to distribute to the downside? That's entirely possible. If that was, we'd be looking to close that bullish fair value gap tomorrow or even into Thursday if we got continuation. And then we have again this 4-hour order block, and we have liquidity that's built up in this wick, right? So we'd be targeting potentially targeting this low, and then maybe even down into this liquidity. Once we got there, we could potentially see a rally back up, or we could see continued downside. But if this happened over Wednesday and possibly into Thursday as continued redistribution, we'd be looking for some kind of bounce on Friday just to reset. But if price was to run higher tomorrow, right, because maybe this move was manipulation, and then we started distribution and we distributed to the higher, we could be targeting this. I have it labeled as our most important fair value gap of our lives. It's really determining right now whether we head higher or lower, because we have traded into it twice and rejected inside of it. Okay, and today we did not even trade up into it. So it's really holding our fate whether we close this and then we start to run higher, or we leave this open and we start to run lower. Also entirely possible that we just kind of consolidate, even though price may have these big moves like we had over here, where we had consolidation, kind of a bear flag looking thing, right? So here we have, bull flag. So here we have kind of a bear flag looking thing. Could we continue to consolidate in this range, which was also a popular range of consolidation here? And also we've had some kind of minor consolidation here and here, right? So we could also just chop around as we start to see this 20-period moving average, volume-weighted moving average coming down, eventually potentially crossing over the 50, right? And then maybe heading lower to test the 200. Every day we move on where we're above the 200 period volume-weighted moving average on the daily continues to head higher, right? So we could, if this takes a while for this move to play out, head up, head down, right? It could land us inside this fair value gap. Could also land us to a fib retracement of this move, potentially the 618 or the optimal trade entry. Let's go ahead and take a look at what that would look like. Okay, so if this here was like a wave one of a new 5-wave move, we'd be looking for price to come down to potentially 232 and some change. We almost hit it here, right? But could we pop back up, come back down, trade to optimal trade entry, or even further down into this bullish fair value gap, right? As price comes up and the 200 volume weighted moving average for the daily acts as support and then runs us higher. So all those things are possibilities. We'll be watching as price unfolds. The daily or the intraday structure will start to tell us more and more as we go along. Okay, so let's dive into the 4-hour time frame so that you guys can take a look at where some of those fair value gaps are set. I'll go ahead and turn off for now my time frame indicator. Okay, but where are we at with the moving averages? We are continuing to be supported by the 200 period, but we have the 20 period moving rapidly down, and you can see it continues to act as resistance as we continue to trade lower. So we are coming to the apex where the 200 period is coming up, the 20 period is coming down. We still have a rising or flattening 50 period, right? So do we come down? Do we test this low, this 200 period, bounce back up to a retracement to the 50? Not quite sure. If we start trading lower, we'll give up this 4-hour 200 period. We'll head back down again, potentially run on sell side liquidity here into this bigger order block, which is also marked as these horizontal levels. But do we trade back down, give up the 200, have the 20 come through it, and then back up to run a test on the 50 as it starts to curl over? So that's what that would look like on the 4-hour chart, is we'd have 20 coming through, 200, 50 rolling over, order block, run on liquidity, bounce back up, and then run a test on the 50 period. Okay, and at that point, potentially, we would see the 200 continue to rise, and the 50 might come below it or might come down to it, and then see if we reject off the 200 period or take it out and head higher from there. So things that we're watching on the 4-hour chart, right? But this big order block that we've already traded into could potentially see us come back down into this order block, maybe not all the way, maybe take the sell side liquidity by a little bit, then head higher. Entirely possible to see that. Okay, as we drop down into the 1-hour chart, we'll expand this out a little bit. You can see currently price traded on the 1-hour time frame with this final candle of the close of the today's session, back up above the 50 period. But we do have a 20 period turning down, right? And we have a continued rising 200 period. So do we trade up tomorrow, try to reject this 20 period, head lower? Possible. Do we just give it up, start to head lower, see the 20 cross under, trade down into this 1-hour order block, which is also inside, so confluence inside the 4-hour order block, same point of interest? Do we come back down, right, run on liquidity or just gather orders and then head back higher? At that point, the 20 period would dip down and then act as support as it drove us down into potentially a curling 200 period on the 1-hour, right? And then with that, also offer us resistance and drive us lower. So things we're watching. If we trade up higher tomorrow, we'll be looking at that 20 period, which is back up around the 250 point, right? And then heading back into this fair value gap and then running a test on the 200 period up above. And if we were heading there, the play would be run on buy side liquidity that sits here in these candle close and candle open levels, which are equal levels. And then we also still have a little bit of this wick left that was never taken. So if we start trading higher and we break above this point here, the 20 period volume weighted moving average, heading up to the 200 period, up in the 250s to 255, right? If we really get cranking and we end up closing candles above this fair value gap, that fair value gap closes. It's no longer the same point of interest. It has been magnetic in pulling price from the bottom back into it, right? So it's laid or it's painted, drives down, pulls price back up, pulled price back up back into it. So it's magnetic, right? Does it want to pull price back up into it? Clear it as the algorithm searches for orders that are resting in this 1-hour order block up here. Okay, so we'll drop down into the 15-minute chart. Gives us a little bit better perspective of what was going on throughout the day. Again, here's those moves. We're going to look at Tuesday's open, right? We had a little bit of a gap down, tested the falling 200 period, ran back up, tested some of the 20 and 50 period moving averages and VWAP. Okay, we traded back down into a existing 15-minute order block, gathered orders, okay, ran it back up to run a test on the moving averages again. We started falling back down into this order block. This 15-minute order block has been very important, even though we ran through it on Monday. Okay, we didn't close below it. So this was just a liquidity grab, gathering orders. There was a bullish fair value gap that is no longer shown here, but is still valid because we never closed candles below it. Okay, liquidity grab, ran up back into this fair value gap. Okay, sold off back into the order block, gathered more orders. Longs went long again because that's a point where they've gone long here, they've gone long here, they've gone long here. Okay, bulls stepped in, ran it back up, ran a test on the moving averages, right? Came back down through the 200 period moving average on the 15-minute, back to the order block. You can see 1, 2, 3, 4 times this order block has held the support, but each time we're getting lower highs. Okay, first run, explosive, up to the fair value gap, doesn't close it, right? Nearly to the order block, but comes short. We got a higher high. Okay, we come back down, we get a lower low or a higher low compared to this one, but compared to this one, it's a lower low. Okay, we again gathered those orders and bounced back up, but could not quite get to the tippy top of this wick high, so less aggressive bounce. Okay, we come back down, we get a less aggressive bounce. So technically, if you're counting wicks, lower high, lower high, lower high is the next one, right? We hit it again. I anticipate lower high. Okay, and then do we drop down through it? Coming back down into this order block here, and potentially down into this 15-minute order block here. Okay, I've changed some of the colors so I can better see. Yellow is internal order blocks, gray is swing order blocks, and this is a yellow and a gray combined, which appears to be kind of green. But this is also an order block as well. Okay, so right now we're barely at the 200 period on the 15, and we don't quite know. We closed just barely above it, but we don't quite know if it's going to act as resistance or support yet. So what are we looking for? Do we gap back up and run down? Do we gap down, run up? Do we open kind of flat? We'll head in a direction. So we'll be looking for clues tomorrow as we see price start to develop at the opening bell. But those are your targets. We also have these bullish fair value gaps that need to be taken out if we do head to the downside. You know, the thing about fair value gaps is that when they're laid, again, they offer support as price runs off of it. And often the return to, just like we saw here, return to, it offers as points of resistance until it's taken out, or support if it's coming down to the bullish ones, right? So we traded up through it, came back down, tested it, acted as support, okay, ran away from it, haven't come back down to test it again. But the fact that we have an order block down here, if we were to come back down and test it, could we see a bounce inside of it? Most certainly. But if it came back around for it for a third or fourth time, right, this is a much smaller one than this one on a bigger time frame. It's not likely to act as support the more times that it runs and tests it, right? And then we're looking for it to close. So the same could be said in this bigger one, is that we've seen it act as resistance. The next time we come through it, it's highly likely we're going to close it. Okay, I don't anticipate we continue to trade inside of it and then see a sell-off from there. I'm looking for a move up if we head into there, and I'm looking for it to break through it, testing this order block or this order block above, or some of our target levels, right? Because the more times price trades into that same range, the less likely it's going to be continued support or resistance. Same thing with this order block, which is why I think if we trade down into it again, we're going to take it out, because we've seen original support, okay, and lower bounces. So next time, do we come back down, take it out, head to these levels, head down to this order block? I was kind of expecting a bigger sell-off today that might have taken us down into this range into close. We just didn't quite get it. The rest of the market was selling off, as we also saw the 2-year and 10-year just shredding today. And so not quite sure why Tesla decided to try to show a little strength, but obviously the buyers were still around, right? But they will be liquidated and taken out if we want to head lower, right? They will be exhausted with all of this chop, chop, chop. If there's no buyers left, they'll head down here where we know buyers lurk, and then possibly lower where more buyers lurk, right? Same thing to be said to the upside is that, you know, or the downside with sellers. We know that sellers committed here. We know sellers committed here, right? There's an order block that rests right here. If we trade up to it, sellers are going to be committed there from this move down, right? And we know sellers are committed up here as well because we've traded up to those levels. So you can expect every time we hit an order block, whether we end up trading through it or not, we're going to see some kind of reaction, because we know that that's previously where orders sat for reversals, and so, or moves, moves for like not necessarily a reversal, but a continuation. So say like here, this order block is laid as we trade down after a move up, right? And that's not a reversal. It's more like just a continuation of this entire move, right? So, but point is that we know order blocks hold orders. And so the algorithm is going to seek to get those orders wherever they rest. Dropping down into smaller time frame charts, again, you see the price development and the structure as we look closer into the intraday stuff. Okay, so where are we at? Tuesday. Okay, price tried to trade down. We saw the liquidity taken right here. Okay, broke this sell side liquidity, right? Because we gapped down, we took the liquidity. There was a level here, hit the level, overshot it by a wick, right? Tried to rally, came back down to test that level, seemed to want to hold. Okay, we pumped up and then we sold off, right? So there is a big fair value gap in here. It held as we traded back into. Could have gone short entry as we traded back up into that fair value gap, right? And you would have got a nice sell off there. We got a nice rally. We set a new order block on the 5-minute time frame. Okay, we tested the 200 period. Wanted to hold as resistance. Okay, we came back down. We rejected off the 50 period. Kind of flirted around with the 20 period. Right, sold off. Got below the moving averages. Closed above the 20 period on the 5-minute. Right at an order block. Called out the closing price. I don't know, 20 minutes before close, said 246.50, missed it by a couple pennies, but pretty accurate. I wanted to see it close in one of two order blocks. I gave the upside and the downside order block. I said I'd like to see it close in this one or this one, but a close in an order block would be nice because we know that either buyers or sellers are committed there. So the fact that we closed right here in this order block, we might see continued move to the downside tomorrow. Right, if we don't just straight up gap those orders, right? The one caveat to order blocks when you're looking at price going into the next day is that a gap up over this order block or this order block would straight not allow those orders to get filled. So if sellers were sitting here and sellers were sitting here and we gap open here, okay, then we might just head up. If we start coming back down, we might catch some sellers, but the move wants to be bullish, so we might see it head up higher into the other order blocks. Right now, we're also trading below the 200 period and the 50 period in VWAP, so we could look at those offering resistance for a continued move to the downside. And those downside targets, even though we have higher levels on higher time frames, we're looking at the liquidity right here, sell side liquidity. For a move down, we're looking at sell side liquidity here, and then further targets would be sell side liquidity down here, which is near our level. Okay, and then the lowest sell side liquidity would be all the way down in this order block in the 234 and some change range. Okay, upside targets if we were heading there, buy side liquidity at 249 3/4. This level that we have marked off here, which was a candle body close on the daily, 251 3/4, right? Buy side liquidity here, buy side liquidity here, right? Because we also know that even though there's order blocks here, we also know liquidity rests in the tops of swing moves, and so we're looking to target those sell stops or buy stops that sit in those candle body highs or those wick highs, right? Last thing I want to do is drop down to the 1-minute time frame. You guys know that this is the time frame I trade on, especially those of you who follow my call outs and follow my analysis live in the Discord. Don't forget, in the description below is the link to the Traders Helping Traders Discord. Right now they're running a special on their premium membership that is first month free. Gives you a chance to try out the premium membership, see that everything's legit, check out some of the live trade call outs, check out some of the analysis and the education, hang out with all the crew that's hanging out there. We have a lot of fun during the day as we talk shop, but also a lot of people making money, a lot of people taking the call outs and then also taking their own trades, and a lot of questions being answered as far as educational stuff. Especially for new traders who don't know what they're doing or just getting experience, can be a great source of knowledge and education. So, looking at the 1-minute chart, okay, what I'm going to do is I'm going to show you a little glimpse into my world. Some of you guys have seen me call this out. Some of you guys may wonder what it is. I'm going to do an educational video in the future on how to understand time macro. But I'm going to drop in my time macro indicator. Again, if you have questions about this, feel free to reach out to me. I'm happy to share the information with you on how I set up the time macros. These are a smart money concept. Okay, so let's get into it. We have our AM session and our PM session. Okay, and this is our lunchtime macro. Okay, inside of our AM macro is the silver bullet time frame macro. Okay, very important when you learn and understand this, that you can see that there's setups in these time frames. Okay, sometimes there's trades here, but sometimes this is just noise, right? And what I've been working on trying to figure out and target is how to find those silver bullet trades. Today we caught multiple silver bullet trades. We caught on the live callouts, we caught a Tesla that went for 30%. We caught a SPY that had partial close. First close was 50%. Second close was 102%. So you can see that those trades are pretty sweet trades. We had 3 for 3 on the callouts today. No failed trades. All trades were in profit. And then the free trade that was given to the free Discord community was also went into profit. It didn't go by much. If you closed it out, you may have got 10 or 12% on that. If you swung it, there's a possibility it could go into profit more tomorrow. But regardless, it was a profitable trade if you closed it. So something I want to look at is this AM silver bullet setup. Okay, so what I'm looking for in this silver bullet setup is I'm looking for the daily bias. Okay, is price trading above or trading below going into the silver bullet time macro, above or below opening price? That's going to tell me daily bias. Is the daily bias bullish or is the daily bias bearish? Okay, leading into the AM silver bullet, price was trading above opening price, so technically the daily bias is bullish. Okay, and I was looking for a run on liquidity that has already happened. So opening candles, okay, ran on liquidity. So liquidity has already been drawn on to sell side. Daily bias went bullish. And so what I'm looking for is certain things. Has liquidity already been drawn on? Okay. Is there fair value gaps or is there an optimal trade entry inside of the silver bullet setup? Okay, because we came from the low and we traded up to the high, even though we didn't get into gap close, okay, we were trading up and then bam, silver bullet, time macro starts, huge bearish candle, okay, tries to trade back up, gives us our fair value gap. Okay, that's what I was looking for. I'm going to mark the fair value gap out here so you guys can see. And I'm going to extend it all the way across, even though you wouldn't be able to see this as it was first laid. It becomes important as it's magnetic later. Okay, and now what I want to show you guys is where we took the trade. Okay, fair value gap was laid. Price runs down. Price runs back up into the fair value gap, hits it perfectly to the wick, to the top of the fair value gap. Doesn't overshoot it. Okay, that's algorithmic. It could overshoot it, didn't overshoot it. Okay, price closed below it. Your entry is in this fair value gap in the silver bullet time macro. Entered the position, 30%er. Okay, trade played out, called it out. Delivery to 1 minute order block. Drew arrows. Couldn't have been any more clear on how it was going to work. But I said, price is going to deliver to this order block. Watch it deliver to this order block. I got out here. I got out here in this candle right here when it hit the order block, because I don't always trust that price is going to run into the order block. A wick to the order block is good enough. Okay, if you were lucky enough, you held it a little bit longer, you got a little bit further extension all the way into the order block, would have maybe peeled off a little bit more profit. But greedy pigs get slaughtered. I've learned lots of lessons on not taking the exit when it's provided. Then price runs against you. What if it hit this to the wick and then went running like it did here? Okay, so I took my exit here. Could have got a little more. We're not gonna, cry over spilled milk. So from that point on, price started to rally. Okay, you could have taken the call as well in the order block, expecting some kind of reaction. In this case, it ended up being a pretty killer reaction. Something that you could also look for is this order block becoming magnetic, right? Because what we teach is that price runs away from and then back to. Okay, especially on the smaller time frames, price does like to return to those fair value gaps. Not always in the same session, but they do like to trade back down into them. or up to them, depending on which direction it's going. So we saw price cross over the 20 period moving average on the 1 minute chart, right? If you were waiting, you could have entered on that break out above it and then look for the 20 period to act as support, as it did, right? You could have closed a partial or closed completely on this quick scalp, trading back up to the 50 period on the 1 minute chart. In this case, you could sometimes say, well, it might reject, right? So there's a quick scalp, you held it, right, back to VWAP. You got a reaction at or around VWAP. Okay, traded over, traded under, equal candles, equal candle bodies. Trades back down, finds the 50 moving average as support. Okay, runs back up to the 20 period, through the 20 period back to fair value gap, and had a reaction. Right, you could have closed on this back to VWAP. You would have gotten a much better scalp. Right, you could have held even longer, traded off into the fair value gap. You got to manage your risk. You got to know when to close. What's right for you may not be right for every trader. Okay, maybe you had balls of steel. You let it play out even further. We returned to VWAP in the 50 period moving average, and then we caught a straight rocket ride all the way back up to the high. Okay, now we're trading into the PM session macro. Okay, look at this candle body, right? We didn't quite hit it with today's, with this candle, but we certainly drew up into liquidity. Okay, we have this whole wick here, okay, that we traded up into the liquidity here. So if you look at just this wick, you could say this candle traded up into that wick of liquidity, right? Drawing more orders. It starts selling down during the lunchtime session. So limited participation during the lunchtime session. You often see rallies or fades during that, and then looking for reversals or continuations in the PM macro. Okay, now we look at the PM macro, right? So we started trading down into the PM macro. We know that there's an order block down here that we've traded into previously, okay? And we know that we have seen what appears to be a reversal. Okay, we got a high here and we got a lower low. So we start to see these lower lows and we can say, okay, price is trending down. So we're going to use our trend line tool and we're going to connect some of these. Okay, and as price expands through, you can still see it offer some kind of support, but as you see some of these wicks, you got to adjust your trend line sometimes. So we're going to use this wick even though we got lower highs here, here, and here. Okay, and we're going to draw that all the way through. When I draw trend lines, I often say to expand them quite a bit out so you can see where we're likely to go. Okay, and you start to see as well as we trade back down into the PM macro session. Okay, we're continuing to respect that even though we're hitting it with a wick. We're not trading candles above the resistance level, the resistance trend line. Okay, and then we see price drop through the moving averages. Right here, we ran a test on the 200 period, came back to the 50, came back to the 200, came back through the 50 and the 20, and then once we gave up that 200 completely, closed a candle below it, not just a wick like this one. This is a fake out. Right? If you caught that and you're like, oh, I'll go short on this wick, well, candle closed above it and rallied back up in the other direction. So caught some bears trying to jump the gun. Okay, but we did come back and we closed a candle below. That could be a good entry. And I want to show you there was a couple different trade setups here. I didn't take them, but they were there. So if we look at this first fib level here, from this wick high to this wick low, we got a retracement back up into the golden zone. Did not quite get to optimal trade entry. Okay, but we did get back into the golden zone. You could have entered somewhere in that fib retracement. You'd be looking for a full symmetrical swing to play out to 246.85. Well, we hit it with this candle right here. So that trade was an initial good trade. Okay, the next trade, which the silver bullet setup gave us, right, was a little bit bigger trade. Okay, you could have again taken this swing and this again return to the golden zone, and we talk a lot about the 50 fib retracement with Tesla. a lot of times it does like to retrace on bigger moves like this up to the 50 or into this golden zone or golden pocket. So you could have caught that bounce, entered in the golden zone, taken another short, right? We were targeting this order block below and we never hit it. Unfortunately, that's definitely where I thought we were going. We were trading down aggressively towards it, and then we caught a bounce. And it's no surprise that it comes in kind of the last 30 to 15 minutes. Sometimes you get short coverings, right? We had a nice big sell-off. Near the end of the day, you have shorts starting to cover, starts to rally back up. Okay. There was also another third setup inside of that PM silver bullet, and it wasn't perfect, but I'm going to show it to you. Okay, there was actually it was perfect. So if you didn't catch the fib retracement, okay, you could have also caught the fair value gap. Again, you wouldn't have caught an early entry, but you would have caught this move here by a return to fair value gap, keeps it open, reaction to the fair value gap, heads down lower, right? And then so also something to note as we look at tomorrow, we do have the potential that fair value gap might want to get closed. And so do we head higher? Another strike on that after coming from a low like that might offer minor resistance, if anything, which could bring us down to set up maybe an inverted head and shoulders look with this structure, right? Shoulder, neckline, head, neckline, shoulder, and then break of the neckline would be a rally back up to buy side liquidity that sits up in these order blocks back near the 250 range. So just wanted to show you guys how those macro time frames can be very helpful. Also, again, when you're selling off in this New York PM macro and you get to that last half an hour, last 15 minutes, and you've been trading down through that entire session, look for those short coverings because you could catch a nice little scalp here, right, in that last 30 to 15 minutes of trading during the session, because shorts start to cover their short positions as they close them out. So I hope this information has been useful. If there's any specific stuff you guys want addressed, again, leave a comment, find me on my socials, or look for me in the Traders Helping Traders Discord. I look forward to talking to you guys again tomorrow, and thanks for all the support.